Hey guys, Eric here, Mr. Fired Up Wealth, and I got another IPO for you. This is an exciting one here. It's a very unique company. It's going to be Rocket. The ticker is RKT. It's going to be released here in a couple of days. Stay tuned. All right, guys. So today we're going to, of course, cover Rocket Mortgage IPO. Rocket Companies is the parent company of Quicken Loans. So they changed their name for the IPO, I guess, to be sexier. I'm not really sure. I've got a presentation and a few things I want to show you. Before we get into that presentation, just real quick, let's go to their website. So obviously Rocket Mortgage, they do mortgages, but it's basically all online for the most part. And what they really pride themselves in is their customer experience. And so you remember I did a video on Lemonade, and that's basically selling insurance, online. That's kind of the trend. People like to buy things online. They don't want pushy salespeople. They want to just do everything through an app, etc. So I actually went through a couple different scenarios here to see how it worked, and it was pretty nice. You can do a chat now in the bottom right-hand corner. So you can take cash out, do a refinance, you can do a new home loan, etc. They have 35 years of mortgage expertise in your pocket. The apps are really good. So this is about customer service, about the application, online experience. 4.9 out of 5-star rating by our clients on the App Store, 24-hour access to your online loan and the app, and the 96% of their clients would recommend us. That's pretty good. Knowledge is power. So it has a lot of great reads on, should you refinance your mortgage, how to 15-year versus 30-year mortgages work, homeowner tips, things like that. I wanted to show you these awards really quick though. So we changed the mortgage industry. People noticed. Stay tuned because there's some cool information about the founder later that I kind of found through the research that I thought was pretty interesting. NerdWallet says Rocket Mortgage document and asset retrieval capabilities alone can save you a bunch of time and hassle. The JD Power ratings, they've got 10 years of consecutive for primary mortgage origination, 7 consecutive years for mortgage servicing. So these guys are on fire. They're actually the #1 mortgage lender originator in the United States. They took over Wells Fargo a couple years back. Rocket Mortgage IPO. The company announced earlier in July that it plans to trade on the New York Stock Exchange. The ticker is going to be RKT, and that's going to be available here in a couple of days. So the video is being recorded on August 4th. They're going to price it tomorrow on August 5th, and it'll be available to trade on Thursday, August 6th. Obviously, if you're watching this after then, you can still get great information about Rocket Mortgage to make a decision or help you with your research to make a decision on if you want to buy the stock or not. At $3.3 billion, Rocket is expected to be the biggest public offering of the year. So it's the biggest IPO of the year when you exclude the special purpose acquisition companies or SPACs, which everybody knows have been the hot thing this year. The company plans to offer 150 million shares priced at $20 to $22 each. 20 banks are set to underwrite the IPO, led by Goldman Sachs and, wait till you see this. And Morgan Stanley, so Goldman Sachs, Morgan Stanley, Credit Suisse, JP Morgan, and RBC Capital Markets. Listen to this. And this is how the rich get richer, and you wonder about retail investors all the time. Underwriters on the transaction, so all these banks, these institutions, the underwriters on the transaction have the option to buy 22.5 million shares at the IPO price. I mean, I want to buy them at the IPO price, don't you? Rocket is the parent of companies including Rocket Mortgage, Quicken Loans, Rocket Loans, and Edison Financial. Rocket Mortgage is the firm's flagship business, having provided more than $1 trillion in home loans since they were founded in 1985. And you probably have heard Quicken Loans, like Quicken Loans Arena. I think the Cleveland Cavaliers, right? Quicken Loans Arena. Rocket Mortgage is the online mortgage application process developed by Quicken Loans, which also provides mortgages. Rocket Loans supplies personal loans to consumers, while Edison Financial offers mortgages in Canada. There you go. Rocket employs 20,000 people in total throughout various companies. All right, so Rocket IPO. Is it a crotch rocket? You got it, the sweet Ducati there. Well, the Rocket Companies is the largest mortgage originator in the United States, like I said earlier. It's actually a $2 trillion U.S. total addressable market for the mortgage industry. That's quite a bit of money. As of right now, they have 9.2% in 2020. And that market share, according to the S1, the market share has risen from just 1.3% in 2009. So 11 years ago, it went from 1.3% to now 9.2% in 2020. I think a lot of that has to do with consumers, how they like to buy things, how they like to operate. And obviously this year you can really blame it on COVID too, because obviously more and more people are going to use online type services instead of going into banks and things that are closed and having to deal with people. So this is one of those companies that's benefited tremendously from a couple of different things, from interest rates and also from the pandemic. And I'll get to more of that in a little bit here. So primary revenue estimates for 3 months ending June 30th, 2020 indicate a midpoint value of $5.03 billion. This is 267% higher compared to the previous quarter and 436% compared to the same quarter in 2019. All right, continuing on. So Quicken Loans did actually publish financial results from its latest quarter and annual figures going back several years. So we actually have a lot of data on these guys, which is really nice. And these numbers show that the revenue jumped in 2019 by nearly 22%. So that's 22% year over year. That means they were actually crushing it before COVID and the pandemic even happened. So that's really interesting. That kind of shows the consumer trend to online and why a lot of these, online retailers and anything tied to the internet is doing really well recently, especially with the pandemic, but it was already a secular growth trend before COVID. So you're looking at over 5.1 billion. The company's annual bottom line has been profitable, but has fluctuated, ranging from nearly 894 million to 1.81 billion from 2015 to 2019. These are considerable feats, though, given that the scope and power, they're basically going against the largest banks and lenders out there like Wells Fargo and JP Morgan Chase, and they're actually beating those guys at their own game. Rocket, yeah, I'm not a singer. I won't hurt your eardrums like that. But anyways, I digress. So Rocket plans to raise up to $3.8 billion by selling 150 million shares. They're going to price between $20 and $22 a share. And that's about 8% of the company's total value, which is $40 billion. And I thought this was really interesting. Of course, I mentioned it earlier too, but Rocket Companies is a company that benefits from coronavirus trends. And don't forget low interest rates and also the greater emphasis on online business. I think like this whole sentence right here kind of sums up the value proposition of why you might want to look into buying this. Obviously they're profitable too, and they've got, a great service, great customer service, but these trends are going to be critical. I'll get more on that in a minute here. So strong financial profile and reasonable valuation when evaluating historic growth, especially for an IPO. And on that note, highly profitable compared to most IPOs, very unique, and potentially it's a great growth play in the financials and tech arena. But let's dig into a little bit more and see what some of the risks might be. This is cool. This is a quote from the founder, Gilbert, and he says, "Our product is sort of a commodity," says Gilbert. "There's not that much different between mortgages, but there is a difference in how that mortgage is delivered in that experience to the customer." And this was actually a couple of years ago. This is Dan Gilbert. He's the founder and chairman of Quicken Loans. And it's funny, Gilbert started the company, listen to this, that would become America's largest lender in 1985 with $5,000 that he earned delivering pizzas while he was in college. $5,000. He's worth, I think, $7.7 billion now, 7.5. Net worth $7.5 billion as of 2020. Okay, so let's go through some of the risks. This is obviously really important, so stay tuned. Rocket Company states that only 5.1% of its total service client loans are on forbearance plans as of June 30th, 2020. But here's the deal. Stimulus hasn't happened. And no new stimulus is really, really bad, and that could put them in a bad situation. So that's something to monitor closely, because there's a chance that stimulus might not get passed before the IPO is actually released for you to buy. So keep an eye on that. Rocket is using, this is another bad thing, a risk. They're using a multiple class share structure, and that actually keeps 80% of the voting power in the hands of institutional investors, and primarily with Dan Gilbert. So you have no voting power at all. I'm guessing a lot of the people that are watching this probably don't care so much about voting power, but that is important to some investors, and it is unique to not have any voting power. Highly tied to the economy, of course. If there's an economic downturn, like things get worse, or if interest rates start to go up, then less people will be buying houses. It'll increase delinquencies, which could force the company to tap into its cash and its credit line. So obviously that's a negative, it's a risk. And also the CARES Act, which permits homeowners to request a mortgage forbearance, could also impact this as well. So this is another risk that I uncovered while I was kind of researching. This is the Barron's article, and I'll put a link to this article if you want to read it in the description of the video. But so Rocket reported $1.8 billion in revenue for the quarter ended March 31st on $97.7 million in net income. This compares to $727.2 million in revenue for the same period in 2019. But listen to this, on a $299 million net loss, according to the S1. You say, well, that's not a big deal. Well, it's good because they went from a $300 million loss to, net income. But you look at all the catalysts that they've had too. So it's just something to keep in mind when you're doing your evaluation process. It's definitely a risk to keep in mind. Final thoughts. So am I buying RKT? Now, before I go into this last piece, I want to thank you for your time for watching. I also want to tell you that I'm doing this video kind of late, so if my energy is a little bit low, I apologize. I've literally been going at it for 15 hours, and I did a live stream earlier. Did my regular job too. I've been, working really hard. We started Patreon last Thursday, and so 4 days ago, we have about 70 people signed up already. The people in there are just simply amazing, and I can't thank you guys enough. We've got a great community. But if you're interested in joining that, it's Patreon /Fired Up Wealth. And I'll put a link down in the description below. You can also just Google Patreon plus Fired Up Wealth and find it. We've got different membership tiers and things. So obviously that's so I can continue to make great content, but I also do a lot of private content as well. And we also have a Facebook group that's free, so check that out. I also subscribe to the channel because, we're just really getting started. We're not even at 10,000 subscribers, but we're going to 100K plus. So come along for the ride. So my thoughts on RKT, Rocket Mortgage. It's actually a really interesting play because, I do put all of the fintech into my financials bucket. A lot of people, most people put fintech into technology. I put it in financials. I do have a couple of the bank stocks. I like this because it competes with those big banks and it's kind of beating them at their own game. I like the fact that it's online, the customer experience, the fact that younger people are going to be attracted to them. I think as time progresses, they're going to be able to get more market share because as younger people get older and want to buy their first house or a bigger house or what have you, I think that is going to be a catalyst for them. There's obviously a lot of risks with stimulus and with interest rates and economic. It's very tied to the economy. So as long as interest rates are low, which I think they will be for a couple of years, as long as stimulus is there, as long as, we don't have a huge foreclosure rate and all those different things, then it's a good investment. So unfortunately, you can't predict time. So am I investing in Rocket Mortgage? I haven't decided, but I probably will dip my toe. I try to say this every time, but I generally never buy all my shares at once. So I'll probably buy like a quarter position at open. If it runs, great. Then I've got a small position that I hold long term. If it drops, I've got lots of room to dollar cost average. And that's how I play most stocks, especially if it's a small cap or an IPO or something like that, just because there's a lot of unknowns. My prediction on this is that it's probably going to have some interest and that the stock will go up. I don't think it's going to be, it's not going to go up 100% a day like some of the IPOs we've seen. But, I do think that there's probably going to be some appetite for this one. My prediction is that it probably will go up over time and that it'll trend upwards. They definitely can be profitable and they can, continue to gain market share. So appreciate watching this video. Have a great rest of your day. Take care.